This is Michael Good from reapertrades.com with another daily trade recap. On today, September 15th, 2009. What you see here is the intraday chart of RAM Energy Sources, and you see that it shot up like a rocket once it hit about 112 or so. And then it shot all the way up to 130 before dropping off and just sort of going sideways the rest of the day. Now you may ask yourself, why did it do that there? Why didn't it shoot up vertically like that when it hit a new high for the day around 10:50 in the morning at $1.10 a share? Was there news here? No, there wasn't any news. What there was an important technical break. Previous high had been $1.12 back in May, and it has never been above that all year. Sorry, not necessarily all year, since at least before March. If you go back farther in time, last time it was about at that point was really last year, November, December. So this is what I'm talking about in terms of a technical breakout. It breaks to a new high over a recent time period, and that indicates that there's strength, there's buying power, and once it does that, they can often run a bit. This was not an ideal one, but for being a non-ideal stock, it was a nice trade. Let me bring over my actual trades for the day. So on RAM, I ended up making $501 on 4,000 shares. If you look at my watch list longs, yes, it's watch list long. It was 11% on that trade, bringing my watch list longs average weighted profit margin to just about 3% per trade, $1,400 in total profit, which is not bad considering I haven't done many of these trades and traditionally I've sucked at going long. So that was a nice trade, and I have to credit the Investors Underground chat room. I didn't even catch this stock in my scan last night. I didn't do a great scan last night, and even if you do a great scan, you're going to miss things. So I saw it alerted in Scan Investors Live, said, hey, this is going to be big on a retest of the highs at around 110, 112. I brought up the multi-day chart, actually multi-month chart, and looked at it, and I thought, hey, that's an important break. If it breaks that, I'm going to buy it. And I actually posted in a comment on one of my recent posts that I was going to buy it if it broke that. So, nice trade. Other things today, CNWI, I shorted. That's a pure pump and dump. It dropped like 30% or 40% intraday yesterday. You can see here, that red bar. And today it hasn't really done much. So I'm going to give it a couple days, see if it can do a death drop in one day. If not, I'll get out of it. GVBP I covered today for a nice $4,400 loss. That was a Tim alert. And I have to say it wasn't a great risk-reward trade. It was risky because I shorted it at 40 cents when the pump was still big time on and the volume was still increasing. So these things can often run farther and longer than you think they can. So a key reason why I covered and why Tim Sykes covered his short too right around here is because it hit a new high for the day, or was just about to hit a new high for the day. That indicates it's likely going to gap up tomorrow, and it's probably going to have another up day tomorrow. Now, if I had more guts, I would buy this stock, but they are so blatant in their press releases. I'm actually anticipating the SEC halting the stock, the trading of the stock within the next few weeks, and you have no clue when that's going to come or if that's going to come. But I don't want to hold this stock overnight in case of that sort of news. So overall, down on the day, $3,900. Still, in terms of a drawdown, I'm back to where I was about a week ago. So not that bad, and it's okay. Yeah, losses happen sometimes. You don't always do great trades, and you move on. You just need to make sure that no loss sinks you, and that's why I covered GVBP. It's still probably would have been a winning trade, but I can't risk the potential of 100% or 200% loss. Anyway, that's all the time I've got. Thanks very much. I'll catch you next time.